Elizabeth Warren proposed a wealth tax. Investors have to look at the world differently than the average Joe. So today's video, we're going to talk about how to look at Elizabeth Warren's wealth tax.
I just got that money swag.
There are a couple of problems with Elizabeth Warren's wealth tax. The biggest one being it's unconstitutional. Basically, taxes can't, on a federal level, you can't have a wealth tax. On a state level, you can't have one. Like property taxes are a wealth tax. That's okay because it's a state local tax. There's certain things the states can do and there's certain things that the federal government can't do. So the federal government can't do that. So Elizabeth Warren knows that. Elizabeth knows that in the Senate and the House, they wouldn't even have the votes, even if they could do it, to pass it. So why did she bring that up? To pander to her base. To basically, you have to look at that and say, all right, she's just talking. That's not something that's realistically about to happen anytime soon. And even if they tried to pass it, it probably wouldn't pass because it's unconstitutional. Not that things that are technically unconstitutional haven't passed before, but it's something that you don't have to worry about. So why is the news covering this? Why is anybody even talking about it? Because it's a story. And it's a story that people who aren't investors, if you like Elizabeth Warren, you love it. If you don't like Elizabeth Warren, you don't like it. But as an investor, you can't really care about that. You have to strip away the real kernel of what she's trying to say. And what she's trying to say is that the United States government is broke. You're like, what do you mean by that? How is she trying to say that? She wants to institute a wealth tax because taxes aren't covering our expenses. So our revenue is more than our expenses. Our income is lower than our expenses. So basically, we're doing like a credit card spending. So basically, like the United States makes $2,000 a month, but spends $3,000 a month. Eventually, that is something that you're going to have to pay the piper for as a regular person. You can get by for a couple of years doing that on like credit cards and stuff, but eventually the credit card bill becomes larger than that $2,000 that you bring in, and that's when you run into trouble. So we have to figure out something, and so that's what she's trying to say. So you as an investor, you have to say, she's really saying that the government is broke. So how do I as an investor invest for that environment? And that's what we're going to talk about today. So basically, like, there's a excuse me, there's a couple ways that we can do that. One of the ways we could just leave. You can move to a country or a jurisdiction that has low taxes, like Puerto Rico. You can move to Panama. But as a United States citizen, you can legally reduce your taxes and not pay a lot of taxes, but you're always going to file a tax return. And if you really want to get away from that, you're going to have to like probably renounce your U.S. citizenship. So it's something that's a real consideration that you're going to have to make, but you can legally reduce your taxes by just moving overseas. So how are we going to do this? It's like, all right, the United States is a country that's doing a lot of deficit spending. So countries that have done a lot of deficit spending or in a lot of debt have turned out to, usually try and print money. How has the printing money worked out for other countries? It has not worked out well. Like Venezuela, Argentina, Zimbabwe have worked well. The United States is a little bit different because there's a demand for dollars, because there's a few countries that basically use the US dollar as their own currency. So there's a large demand for dollars, so it's not going to work the same. So like hyperinflation in the United States is probably not that likely because of the demand for the US dollar that's out there. Like hyperinflation like Zimbabwe, that's probably not going to happen. But inflation might happen. They're in debt. They don't have the money to pay for it. So they're going to have, history has shown that they're going to like quantitatively ease to print that money. So basically print money to pay for it. So when they print money, the money that you have in your pocket is worth less. So if your money is worth less, that means the grocery store is going to have to charge more so they can, get that same value. So how do you invest in an inflationary environment? So you looked at Elizabeth Warren's wealth tax, stripped away to what she's really trying to say, and then you look at it like, okay, so she's basically saying that we spend more than we have, and we need to figure out how to do that. So you as an investor, you say like, how do I invest for the environments that happens when countries do that? So Most of the time that happens, it's like an inflationary environment. So you could say like, okay, let me pick up some investments that, are like real estate, real tangible things. Something that I'm looking at right now that I like is Barrick Gold. The only thing that I really don't like is they issued new shares. So like they kind of diluted your position, but I like Barrick Gold. If you want to have physical gold, you can have physical gold. Yeah, I like Exxon, as you've seen on the on previous videos. So basically, like, there's a lot of ways to invest for an inflationary environment. You can invest overseas in countries that you think have a better track record. Like you could say, I want to put my money in Singapore right now because Singapore isn't doing the same money print that the U.S. is doing. It isn't in as much debt as the U.S. is doing. So that's how you as an investor have to look at it. Okay, this story is happening. What are the politicians really trying to say? And then how do I protect myself from that if I do indeed think that's a threat? Some people don't think we're going to get into an inflationary environment. I do. So I invest in like Exxon right now is something that I picked up. Barrick Gold, something that I picked up. I invest in real estate. You guys know I have the hotel overseas. So there's something that I've been seeing coming for a while. So I've been trying to position my portfolio as such. You might think differently, but you need to look at what these politicians are saying and lose the political parties, and then just look at how this does affect my investment. And that's just something I think you guys should think about. This is in the channel for politics, so if you like Miss Warren, if you don't like Miss Warren, I really don't care. But this is something that investors need to do. Like, okay, I like this person, but if this policy goes forward, how does that affect my investments? Boom, boom, boom. Like, or you can have it, let's take another thing, like let's say green energy. I don't like green energy, but they're going to put a lot of money into green energy. Maybe I should invest in a company that does solar, or maybe I can invest in a company that does, whether you like it or not, if they're going to put the money into it, why not profit off of that? Unless you feel so strongly that you don't want to. But from a business mindset, like, if it's going to happen anyway, I might as well make a couple dollars out of it. So this is Nick signing out. Again, if you want to read more about the Elizabeth Warren wealth tax, there's going to be a link below. Thank you guys for watching. I appreciate your time.